Kaveri Seeds had little to cheer in the second quarter. Their revenues fell as expected and so did their profit. What may put investors in a spot of bother is the margins decline. The company, though, managed to reduce its overall debt, which in the current scenario is a good thing. Joining us now to talk about the opportunities in the remainder of FY20 is Mr. C Mithun Chand, who's the Executive Director at the company. So thank you so much, first of all, for taking the time out and speaking to us. Well, it was a steady quarter for the company. We know for a fact that the first quarter is where you do the maximum amount of business. But can you take us through the key highlights of the quarter gone by?
Hi. As rightly said, this quarter is a very lean quarter for us. Basically, most of the second quarter is a spillover sale of the first quarter. Because in the second quarter, this time the monsoon was delayed, so we had a better sale in cotton and slightly muted sale, a declined sale in maize. But overall, we have grown at a quarter-on-quarter basis as 2.5% in terms of the revenues. But if you see the EBITDA margins from the business income, from the operations, leaving other income, we have improved our margins from 10.47% to 14.58% this year, an increase of close to 4% in terms of the EBITDA margins. Okay. And overall, in the first half, at a consolidated basis, we have improved margins by 2%, excluding other income. So we are not considered other income in this, because other income is the income which we get out of the investments in the mutual funds. So we have not got any income in the second quarter. So only in the business terms, we have done very well compared to previous years, and we are in line with the estimated sales and the margins.
Sure. Sir, I remember speaking to you in the previous quarter as well, and you had mentioned how the delayed monsoon in the first quarter, that would result into some positive slippage happening into the second quarter. And we've seen the monsoons extend far beyond that. In fact, we are in the month of November and we've still had some showers. Has there been any trend with respect to the delayed sowing, and are there opportunities that you are seeing in terms of the commodities that you're present in? Are they likely to see better sales in the ongoing quarter, which is the third quarter, because of the delayed Rabi sowing?
Yes, as discussed in the first quarter, we said that there might be some spillover sales of cotton. Yes, that has resulted in a spillover sale. We have done 2 lakhs more. I mean, in terms of the percentage, we have done more than 35% more than previous quarter in cotton. But it's a low base. In absolute terms, we have done by more than 2 lakh packets. But the one good part of it is that even though it was a delayed monsoon and it affected some crops, especially like main areas like Telangana and Karnataka, we see a very good Rabi coming up, because as most of the tanks and the moisture levels are very good, and even the commodity prices, even though it has corrected lightly, but it's better for the farmer. So we see a very good Rabi, especially for crops like maize and rice. But rice mostly it will be a varietal rice, so we don't play much part in it. But whereas in maize, we have very good market shares in most of the areas where we operate, and we see a very good growth coming in maize. So we anticipate a very good Rabi season this year.
Sure. One of the key focus of the company over the last several quarters in terms of diversifying their product portfolio has been focusing on the non-cotton crops. Cotton still accounts for a sizable portion or bulk of the overall revenues. How have some of these other products performed, like the hybrid products or the new launches that you've had in the hybrid segment? Could you give us an update with respect to that?
We are still in line with our guidance what we are given, that we want to reduce our dependency on cotton. Going down the line, we want to make it a 60-40, which is for like 50% for the previous year. And for the first half, majority will be cotton, so it will be around 60% for the first half. But we still stick to our target to reduce it. And if you leave a crop like maize, which we are impacted, but if you take crops like paddy, in hybrid paddy, we have grown by more than 50% compared to previous years. So we are in line with our target, and we think going forward we are pretty confident that we will reduce dependency on cotton. I mean, this is the revenue contribution from cotton, and will increase non-cotton crops. Even vegetables is doing well now. So this all will add to the growth in the coming 2 to 3 years. So we are in line with it, but maize being a tough year for us, it's not reflected this year, but going down the line, this is our strategy.
Sure. Sir, for the first half of FY20, we've almost done close to 95% of what we did in the previous financial year. And although FY19 was a bit of an aberration, we saw a degrowth come in on the full year revenue basis. Going forward for the second half, obviously, because of the first quarter being the main quarter for the company, what sort of an incremental growth are you expecting in the second half of the year? And what is your target in terms of ending FY20 as far as your top line is concerned?
So compared to previous year, second half, as rightly said, first half contributes to majority of our revenues. But being Rabi, we anticipate a very good Rabi because of the late monsoon and a very good excess monsoon in most of the parts. Maize acre area should definitely improve, and the majority of the revenue is contributed by maize in third and fourth quarters. So definitely we are in line with the guidance what we are given in that 15 to 20% guidance. We think that we can achieve that.
15 to 20% top line growth for a full year of FY20.
Yes, yes.
Okay. And lastly, sir, as far as your balance sheet situation is concerned, we almost operate on virtually zero debt. The company is sitting on cash of almost 440 crores. Historically, we've seen you rewarding your shareholders in the form of buybacks and dividends. Are there any other opportunities that you're looking at in terms of utilizing the cash on the books?
So every year, if you see, this is the third year where we are doing the buyback, and we have just completed our postal ballot procedure. So we are waiting for the SEBI approval. Once it's done, we will be doing another round of buyback. So our intention is to reward the shareholder by distributing whatever cash we have generated by taking our needs. And as a company, we don't have much of a capex plans, and most of our facilities are already established, and very minimum requirement of capex going forward year on year 20 to 30 crore, that should be more than enough. So we still, I think, as our intention is to continue the same thing to reward the shareholders. So we'll think that particular time, whatever is beneficial buyback or dividend, the board will take a decision and we will reward it. But as a whole, we think we will reward shareholders whatever cash we generate.
Okay, so we leave it at that. Once again, thank you so much for speaking to us, and hope to get in touch with you again post your third quarter results.